I say the stock market is pretty raw. This is where our animal behavior comes out. In the stock markets, you don't think rationally. With your salary, you can't afford to buy a house in Bombay ever. I equate a bull market party to a free buffet with alcohol in the house. The party starts at 6 o'clock and ends at 12 o'clock sharp. And it's free unlimited booze. But you can't wait till 11:30. Because 11:30 things start getting messy when everyone is drunk. The day Steel Authority of India starts making profits, the sector has peaked out. It is the most inefficient player. When JSW Steel makes losses, the sector has bottomed out.
Hi guys, welcome to another episode of I Did It My Way. Today I have a very interesting guest with me, someone who has outperformed the market in the last 1 year since inception. Siddhartha Bhaiya of Aequitas is here with me. And of course, a lot of people know Aequitas because of Siddhartha, not the other way around. Siddhartha, thank you so much for being here with us on the show.
No, it's a pleasure, Sonia, to be on the show.
And for the uninformed viewer, let me just put it on board, right? Your PMS and AIF has been one of the best performing. In the last 1 year, I think your PMS has given 100% returns compared to the Nifty at 23%. How did you get it so damn right?
So, we've not done anything. And Sonia, more importantly, the 1 year returns don't matter to me. What matters to me is our 11-year CAGR, which is close to 35%. So 1 year, in fact, we've not added any risk to our portfolio. The markets have done well. So I was just discussing with my ex-boss and we said, kaam to government kar rahi hai. We are kind of benefiting by being in the right country at the right time in the right industry. So last 1 year has been good, but I'm more proud of our performance over the last 11 years.
So in the bull market, everyone does well, right? It's in the bear market when you really find out you separate the wheat from the chaff, so to speak.
Yes.
You think we're headed into a bear market?
I think we've had a fantastic 4 years. More importantly, I think COVID, we probably saw a 2-month sharp drawdown. A lot of money has come into the stock markets in the last 6 to 7 years, which has never seen a bear market. I'm worried for that money. The kind of P multiples that I see in India right now, I've never seen anything like that in history, neither in India or anywhere in the world for such a prolonged period of time. You have stocks quoting at 50, 70, 80 P multiples for a sustained period of 2-3 years. I don't think so these valuations are sustainable.
You stopped taking money into your funds, right?
Yes,
Why is that?
couple of months back. So Sonia, we have minimum return expectations from ourselves. Right now, we don't find enough stocks with margin of safety. And it is better not to accept money, so that's the only reason. We don't find enough opportunity. See, we're not bearish on India per se. India is a fantastic country. It's a growth market. For 20 years of my investing career, I've invested only in India. But at this point in time, there's so much money coming into the stock markets. And we get a lot of call from retired people who might have a small exposure to the stock markets, but they want to take a big exposure to the stock markets through us, which is, so in a way, the low interest rate environment is pushing people towards the stock markets because relatively you hear your neighbors doing well, right? The FOMO drives you to the stock markets. And the best part about the worst part about the stock market is people only go about talking about their winners. Nobody talks about their losers.
That is what it is, right? But you said you're worried about the new breed of investors that have come through because they've not really seen a bear market. What worries you?
What worries me is, look, my wife is a techie. She does, she runs an organization which teaches coding for kids. One of her teachers, one fine day, she just quit and said, I want to start investing in the stock markets, which effectively means trading. She's in engineering. She doesn't know anything about the stock markets. But it's a very desperate decision that she's taking. And my worry is people are going to put 7, 8, 10 years of their savings at one go. And then they're going to bear the consequences. So I've seen it time and again. I love speaking to people about the stock market experiences. People who have lost money in the past. And you're seeing the cycle repeat this time. So stock market I say the stock market is pretty raw. This is where our animal behavior comes out. In the stock markets, you don't think rationally. Or rather, at the bottom and at the top, people don't think rationally. What explains that March 2020, people only wanted to own a select few large caps. And today, people only want to buy small and mid caps.
And PSUs.
And PSUs. And such a dramatic transformation in 3 years. It's like people have just wiped their memories clean.
So, someone was saying the other day that everything that didn't work for the last 15 years is working now, whether it's defense, railways, PSUs. How do you justify that?
So, how do you justify that? To be honest with you, to make money in stock markets, you need to be extremely, extremely contrarian. And I have owned a few PSUs in my personal list, and I just bought them, when their IPOs had come, and after the IPOs, I just bought them. And the amount of dividends that I was getting whenever I used to file my annual returns, I was amazed. You're getting like 15-18% dividend yields. There was too much value at that point in time in this. So you have to be extremely contrarian in the stock markets. You have to be a cynic. You have to think that 9 out of 10 people are wrong. It might sound arrogant, but you have to think that 9 out of 10 people are wrong.
You have to question everything.
You have to question everything. And you have to, so you have to be a cynic, and you have to be extremely cynic, and you have to be extremely optimistic that anything can happen. Who would have thought that PSUs would be 10 baggers in a year's time? And who would thought that the small cap index would rally 700% in 3.5 years?
Have we reached a top now, you think, in small and mid caps?
I wish I knew that answer, Sonia. Nobody knows that.
What's your best guess?
Again, as I said, I could never have, nobody could have ever predicted COVID bottom. Nobody, even a year back, would have predicted PSUs rallying this way. So you don't know. Forecasting is a folly. All you have to do is make you have to make, how do I say? You have to just take calculated judgments and be rational. So in our funds, we've moved to close to 20-25% cash. And we've also stopped inflows. So the market goes up. Our theory is that the market goes up from these levels. Hopefully, we should be able to outperform with being 70-75% invested. If the market goes down, then we'll have enough dry powder to invest at the right time.
Okay, so you've moved 25% to cash
Yes.
now. Okay. So you think it's going to be a long drawn out, either consolidation or correction? What was the rationale behind moving to cash?
It's madness of the crowds. It is the IPOs that are coming through, QIPs, the amount of money that promoters are raising. In some cases, promoters are raising more money through a QIP or an IPO than they have through 10 to 15 years of running their operations. So which promoter would want to run business, 15 years, you have to toil.
Yeah.
And in one fine day, overnight, through an IPO or a QIP, you can raise thousands of crores.
True, true. But, just going back to where I started, right? Your PMS has given 100% returns in 1 year, while the market has risen 20%. Huge outperformance from your end. How do you catch market cycles and how do you catch sectoral uptrends?
So, Sonia, what we have is, we have 3 pillars to our stock picking. First and foremost is value. Second is a contrarian approach to investing. And third is growth. Okay. The thing is, the first 2 are fairly predictable. The third you cannot predict. So, one, you want to buy deep value. Second, when a stock is in deep value, it is also extremely contrarian. Like PSUs. They were deep in value. You're talking about 15% yields, 10% yields on NTPC and Coal India, some of the biggest companies in the country. So they were deep value. They were available at 2-3 times earnings, and they were extremely contrarian. Nobody wanted to buy them. Then, what you have to do is, it's like fishing. It's like fishing. You have to cast the bait, and then you have to wait for the fish to come. And the fish in this case is the growth. And once the growth comes in, market goes berserk as far as P multiples are concerned.
But fishing also needs a lot of patience. So
Yes,
how
it
long
needs.
do you wait for growth? There's an opportunity cost there as well, right?
So there are times where you go right immediately. There are times you have to wait 5 years, 6 years. For a lot of our stocks, my portfolio in March 2020 and my portfolio today is pretty much the same. A lot of the stocks that we owned that day, we still own today. It's only that people's perception about those stocks have changed, not our perception.
You think it's not a buy and hold market anymore? Because, 10 years, 15 years ago, if you had bought a sector and held it through the decade, you would have perhaps made a lot of money. But now it doesn't seem like that's the case anymore. What's your best guess on
I
how
think,
things are
look,
shaping up?
as I said, Sonia, this forget buy and hold. This is not even like a buy market for me. I've never seen, I'm telling you, this is the first time in 20 odd years of investing that I have not looked at a single quarterly result,
Why is that?
except for the companies that we own. I just don't find any value. I don't want to get, I'm very, very clear when I look at this 70 and 80 p multiple. So we started looking at the international market, Sonia, and the kind of opportunities that you see internationally, and I'm talking about East, I'm not talking about the West.
Which markets in the East?
It's all the markets. It's Hong Kong, it's Indonesia, it's Korea.
Because China is under a lot of pressure now. So
It's the valuations are insane. They're so cheap. And same thing, extremely contrarian, deep in value. You have to fish. You have to put the bait out. Growth at some point in time is going to come in. Didn't it come for Japan? Japan's now made a new lifetime high after so many years.
So in the Indian markets, if you look at this combination, this troika, deep value, extreme contrarian and growth, are you seeing any sectors that fit into that bucket?
Nothing right now. A year back, I would have told you a few. Now, see, this is where the efficient market theory, in a bull market, efficient market theory works at its best. Companies come out with their 2030 vision and the stock market is discounted
Immediately.
immediately.
So you're saying this is not a bull market anymore?
I don't know. Probably
Doesn't feel like it.
It is a bull market, right? It's a roaring bull market. Now, I don't know when the tide turns. I have no idea. As I said, we've made phenomenal money for our clients over the last 10 years. We've bought into pessimism at every single point in time. Right now, there's too much optimism. And when there's too much optimism, you cannot make money.
But what is the concern? Because everything seems to be very hunky-dory right now. You have the government that perhaps is, in all likelihood coming back to power. Macros are improving. Compared to the entire emerging market space, India is looking pretty good. So where does the problem lie?
Tell me which bull market has not peaked on good news. You wouldn't have a good bull market peak if the news was not hunky-dory. What was the greatest bull market that you ever saw in the 20th century?
2004 to 2007 is what I saw.
1920s, the US. You had the greatest depression after that. So, as I said, the government is doing a fantastic job, right? But any bull market also attracts a lot of unscrupulous elements. Fly-by-night operators who want to become rich very quickly. Aka, the people who are raising money. IPOs are coming at 80, 100 P multiples. In some cases, no profit. So you're going to see, we're going to see a lot of people swimming naked after this tide ebbs away.
So what do investors do now if you want to prevent yourself from swimming naked when this tide ebbs? What's the best way to approach it?
This is don't go lock, stock, barrel into the stock markets at this point in time. Even if you're excited about the opportunity, spread it out. This is irrationality. I talked about irrationality, right? I know so many people who took a call in March 2020 that I just want to get out of equities. Sold completely. And there's so many people right now who are taking calls like, I just want to be in the stock markets.
All in.
All in. Stock market plays with your mind. It plays with your mind. It brings out the animal in you. We think with our animal brains. We don't think with our rational brains in the stock market. The greed and fear, we all know we've got to be greedy when others are fearful, fearful when others are greedy. But we just can't do it when it is there. Right. So To be honest with you, again, I don't even listen to myself. I follow
That's not a good thing.
I just follow my discipline, because you look at it, everything is hunky dory right now. You can't find a fault with the economy.
So, we'll come back to the markets, but I wanted to know a little bit about your own journey as well. How did you start? How were you always passionate about the markets, and what led you to Aequitas?
Okay, so Sonia, I did my CA, right, and I was born and brought up in a suburb near Bombay, which is like 40 kilometers from here. Luckily, I had a good upbringing, very good education, middle class background. All my friends and schoolmates were from a middle class background, so we had, you know, we did not get everything that we wanted, but we had everything that we needed. So, focus was on education, got a good education, had a good peer group as far as school is concerned, did my CA. And once you're doing your CA, everybody gets attracted to the stock markets. I don't know of a chartered accountant who's not dabbled in the stock markets or who doesn't dream of being in the stock
It's a
markets.
natural progression.
Then that's a natural progression. And to all the chartered accountants out there, all I'll say is you got to be very desperate. So we put out this for resume and we get 500 thousands of resumes. But there are only 3 or 4 people who are really, really passionate and desperate for that. And I was one of those guys. I was looking for a job and I didn't want to spend, Sonia, my life traveling from Ambernath to VT, commuting 4 hours a day. So I said, what's the best way? Get into the stock markets, right? That's where, because with your salary, you can't afford to buy a house in Bombay ever. So got into the stock markets, was very difficult. It was a very, very tough period. It was just after the dot-com
So you
bubble has
started
burst.
by trading on your own?
No. So I figured out what's the best way, become a research analyst. I got into sell side, started working as a banking analyst. Again, that was a very good thing that happened to me, because once you're a banking analyst, you get to understand the economy a lot more better. So started with a banking analyst, and yes, and then that's how the journey began. Then after a couple of years of working, 3 years of working as a banking analyst, I went to my boss. I told him I want to do small and mid caps also. And luckily I had a very good boss, Imran. He said, yes, go ahead, do it. He didn't stop me. And since then I've never looked back.
So you've been interested in small and mid cap since a very long time.
Oh, I've done that in the last 20 years. Even in March 2020, when everyone quit.
So when you identify a good mid cap, right, where conviction is high, confidence is high, there's value, there's growth, everything, when do you decide that, okay, this is it? When do you sort of exit a stock? That seems to be a big problem that people have.
You exit the stock when you see the opposite of those first two things. When you no longer find value, and when you see that the stock has become extremely popular. Earlier it was the local train where you used to hear about stocks and you figured out, okay, this is the top. Now it's Twitter. You open Twitter and when you see your companies trending or people discussing, you're close to the peak.
You need to exit at that time.
Yes, probably, or to start taking some money off the table.
But is that the same way to approach market cycles and sectoral cycles as well? How do you know when
100%.
a sector is peaking?
How do you know? There's only one way to know. For me, in steel, the day Steel Authority of India starts making profits, the sector has peaked out. Is the most inefficient player. When JSW Steel makes losses, the sector has bottomed out. And it's true, all industries, I don't buy this argument that all industries are growth industries. All industries are cyclical. All industries go through cycle, even media. 5, 6, 7 years back, media stocks were supposed to be the growth stocks. And then all of a sudden came Netflix and OTT and the valuations crashed. You got opportunity, we bought them and they're doing well now.
Yeah, that's true actually. But then you also have this fear, right? When valuations are good of a company, generally the fundamentals are not great. So at what point do you decide that, okay, I'll buy into this despite it being cheap, fundamentals are not that great, but I'll still take that risk. So chemicals, for example, right?
Yeah.
I mean, not doing that well right now, but valuations are not bad compared to some of the other sectors.
Again, as I said, that's what I'm telling you, Sonia, that cycles are pretty long. They are longer than most people's memories. So if anyone thinks that the chemical sector has bottomed out, I'm sorry. Bad news. Chemical sector did well for 7, 8, 10 years. I have personally bought Naveen Fluorine, 500 rupees, 10 paid up, with 50% net cash on the balance sheet at 8 times earnings. Today it is what, 60, 70, 80 P multiple? Just because they did well. It's a cyclical industry at the end of the day. Whether it is automobiles, whether it is IT industry, IT services, whether it is chemicals, whether it is banking, these are all cyclical industries. Why have banks not done well in the last 1 year? Because a lot of the money has come to the stock markets. They're struggling to raise deposits.
But do you think banks will struggle for a while?
I think so. See, it's a chicken and egg situation for banks. If they don't grow, for them to grow, they have to aggressively increase their deposit rates. And for deposit rates to increase, the stock markets have to crack. Some of the money which is coming into the stock markets has to go out to, there has to be a balance in the economy. So while 5, 6, 7 years back, we needed money to come into the stock markets. Today, excess of anything is bad. Today, we have excess money coming into the stock markets, which could affect the productivity of the country. At the end of the day, banks provide working capital loans to industries. They finance projects. If there's no this available over there, then how do how do these companies grow? So banks are going to struggle as far as their deposit growth rate is concerned. So yes, and again the same point. A year back, what was the the call that if India has to grow, if the market has to go up, banks have to do well, wasn't it there? Have the banks done well? No, they haven't. Has the Nifty done well? Yes, it has. So anything that appears like a sure shot trade appears like a no-brainer, never works.
Market doesn't oblige.
No.
Yeah. But what's your view on these new age companies? Because again, over there, right, contrary to perception, they have done exceptionally well. Many of them, Zomato, PB Fintech Delivery, Nykaa, all reporting profits now. As an investor, do you see scope here?
So one, I look at the international market, Sonia, and I find similar companies at much lesser valuations over there. So I would rather put our money over there in similar companies. Second, there's some businesses, again, I'm a value buyer. They might have turned a profit, but where the valuations? Where the valuations?
But don't you think some of these P multiples that we were used to, say, 5 years, 10 years ago, don't you think things have changed now purely because of the kind of growth that these companies are seeing and the earnings that they're reporting?
Where's the growth? What kind of volume growth has Hindustan Lever delivered over the last 10 years? 4, 5%? I can show you globally, anywhere in the world, FMCG companies at 1/3 the valuations of, a Nestle or a Lever. And the growth rate is not that different. I can understand if it's in Nvidia or something like that, where the growth is 100% plus. Show me any of these companies which are able to grow at 100%. It is just that there's too much money that has come into the Indian stock markets. I think S. Naren made a very important point that you have, people who started investing before 2013 and people who have started investing after 2013, the valuation, this is completely different. And I'm a firm believer that, in the long run, it's a reversion to the mean.
I'm sure there's value somewhere in this market now. There are new sectors which are coming, sunrise sectors, so to speak, right? Whether it's electric vehicles, renewable energy, big focus area in defense, etc. I know these stocks have rallied, but I'm sure there's some value somewhere.
There might be. Do I find them? No, I don't find them, to be honest with you. Right now, I equate a bull market party to a free buffet with alcohol in the house. Okay, the party starts at 6 o'clock and ends at 12 o'clock sharp. And the smart people get in at 6 o'clock, eat their fill, and it's free unlimited booze. But you can't wait till 11:30. Because 11:30 things start getting messy when everyone is drunk. Right? So you're at the end of, I've had my full.
Is 2024 that 11:30 of the party? Tell me that.
As I said, I wouldn't even wait till 11:30. I'll be happy going back at 11 o'clock because I came in at 6 o'clock.
But you're somewhere hinting that we are at the end of this party, right?
I don't know, Sonia. I can be wrong, and I don't want to. Uh, my views can be wrong. All I'm saying is I'm worried about the markets. I don't know when this ends.
But then, if equities won't do well, other asset classes will do well.
100%.
Gold, maybe, debt, right?
Yes.
Everybody's looking at that. So, which are the other asset classes that
See,
you're
I'm
bullish
a
on?
long-term bull on gold. I really feel it's a great and credit and kudos to the Indian housewives who've hoarded gold over the years, because it's one of the best hedges against inflation. It's the best hedge against money printing. So I'm a big. The amount of gold that we have in the world is very finite. So any excess money printing that happens gets captured into this. Real estate should do well.
But when you want to invest in gold, is it better to invest through the sovereign gold bond route rather than physical gold, you think?
Oh, 100%. 100%. You own physical gold, then, you have sleepless nights.
Where do you store it?
Yes. So it is better to always invest through. I did a lot of gold ETF investing for my,
For your kids.
for a couple of years. I don't do anything for my kids.
That's another story. So what's your strategy with your kids? You're just going to educate them and tell them go fend for yourself.
Yes. I don't, Sonia, me, and I see a lot of people, a lot of my clients are first generation entrepreneurs. Everyone in my office comes from a relatively humble background.
First generation wealth creators also.
Wealth creation, or the guy, the biggest challenge in India is there's a lot of wealth disparity. 1% of the country is extremely rich. The rest is this. And as Buffett said, that, we won the ovarian lottery. We got, what if we were born in a slum? Do you think you and me would be here? We wouldn't be here, right? So my kids are lucky that they got in a good family, but there are a lot of other kids who don't have the same this. So to me, yes, that's a very, very important thing that I'd want to give them an opportunity to become self-made.
But see, kids come with that understanding of the privilege also, right? They see it all around them. So even if you don't provide the means, if they know that they have that privilege, is there going to be any desperation for success?
So to me, Sonia, deprivation is one of the greatest motivators for success. Like if I wasn't deprived, I just tell people that if I had a house in Mumbai, I wouldn't be where I am. At the age of 26, you're getting married and you don't have a house, you kind of have to struggle. If I had a house, and I see so many of my friends who had a house, whose parents had a house, they did not succeed so well because you can't just buy a house in a city like Mumbai on your paycheck. You have to work really, really, really hard. So deprivation is a big tool for success. But at the same time, while I cannot deprive them because, I can't change this, but I do not want to put everything on a platter for them. So they'll have to struggle. You hearing it, girls?
Well, I mean, that's a common problem in every household these days, right? Kids have everything, so it's such a fine balancing act to make them on one hand realize that they have everything and on the other hand create that need for them to kind of grow on their own. But you think that was one of the reasons why you reached this level of success, because you came from such a small background? And can it work any other way? I'll tell you why. Like, I speak to so many people, right? So many successful people, and the common thread is that I never had anything, and that's where the hunger came from. So does it mean that if you have it all, there is no scope for success?
There are always outliers. Every rule has an exception. So there may be somebody who's got everything and he might still do well. But those are rarities. And the biggest advantage that you can have in a country like India is being born middle class. That's the single biggest advantage, because you get access to good education. And that changes everything. It's the biggest advantage. If you're born poor, okay, there might be somebody who's really poor and who might do well as well. But again, that's a rarity. You see, majority of the successful people, they come from a middle class background who had access to good education. Right? So, for me, 100%, it is that I got access to good education. I was surrounded by good peers in school. I had good friends growing up, whether it was my articleship days, whether where I was working. It middle class is privileged. Trust me.
I agree to a
And I
certain
deal with
extent, yeah.
a lot of rich people, and I can tell you that it's they say money is vile. It is, it is.
So what do they say? Does money really buy you happiness?
No, happiness is a state of mind. Sunshine buys you happiness. Get a lot of vitamin D. No, I think money does not necessarily ensure that you are happy. What After so many years, after meeting so many clients who are rich, who are successful, I've realized that it's eventually how your kids turn up decides how successful you are.
Or,
So
or how successful you think you are?
yes, no, the world thinks you also feel happy. You don't want your sunset years, with a child who's addicted to drugs or who's got a drinking problem, right? So, my parents are more successful than, probably I'm going to be.
You never know that. That's just your fear, right? A lot of us live in that fear.
Yeah.
But coming back to the stock market, right? What are the virtues that one needs in order to be successful in the stock market?
What are the virtues? Oh, I say stock market is 10% fundamental analysis, 10% technical analysis. It's 80%
Your mind.
your mind. How do you treat money? Like for me, I'm dispassionate about money.
What does that mean?
It doesn't make a difference to me how much extra money that I make,
That's because you have it.
even when I did not have it.
So what were you passionate about then?
The money is just a byproduct. It's your career. It's what you want to achieve in your life. If money is your sole objective, you're going to falter at some point in time. But if you have a career, right? You're a journalist. What you would want more money or a better career as a journalist? Would you want to be known as the number one journalist in the country? Would you want to be known as, and then when you reach there, you automatically make, what's your goal?
To do
My
good work.
my goal is to be the best fund manager in the country. Whether I'm going to achieve it or not is a different thing, but that's the goal. That is what I wake up every single day and think of.
So
Money is a byproduct.
So you don't chase money.
I don't chase money. And Sonia, to be honest with you, I'm in a profession where you get disproportionately rewarded for being right.
But you also get enough and more brickbats for being wrong, right?
That comes with any profession where you put out your performance in front of the public. You get the kudos, you get the applause, right? But at the same time, you're also, forget me, look at somebody like a Virat Kohli or a Rohit Sharma. They are more in the spotlight. Now, would you rather be a Virat Kohli or a Rohit Sharma, or would you be in a 9 to 5 job where nobody knows what you're doing? So I say I'd rather have ups and downs, highs and lows, rather than live a mediocre life. So if I wasn't this good, I wouldn't be on this show.
But you said you're dispassionate about money. How did you get there?
The realization that, luckily for me, I did not get money at the right time. It was always a little delayed. So maybe if I had too much money in my youth, I would have gone out partying a lot more. That time you didn't have the money. But it came a little later and you realized, okay, it's not good for your health. But in your youth, you can take anything. Maybe in my 30s, if I had a lot more money, maybe I would have bought a fancy car. But right now, while you have the money, you realize, no, you're not setting a good example for your kids. So it's just that, okay, how you treat your money, how you deal with your money.
But in your profession, right, it's tough because you can't obviously put up the same kind of performance every year. This year, your PMS is outperformed in a big way. There's a very slim chance of you repeating that performance.
Yes, not going to happen.
So how do you deal with that stress?
How do I deal with the stress? Be upfront with our clients about what their expectations are. We never told them that we expect it to be 100% this year. Whenever new people come in, and we're getting a lot of new inquiries of late, and one of the reasons we stopped it is because we realized that this is a lot of hot money as well. People who haven't seen downturns. So what we did is we stopped the fund. We told people, put in your interest, and when we open up, we will call you back. And I have a bet going on with my team that of all the people who have registered their interest, not even 20% will give us money when we ask for it.
Because that's when the market will fall so badly.
Yes. Right. So,
but that has always been in hindsight the best time to buy a market, when it crashes bad, right?
So most people don't understand how difficult life is for a fund manager. You don't get money when you want it, and you're being chased when there are not many opportunities. So I think from March 2020, for 2 years, when we did really well, our portfolio was up 200 to 50% over that period. We got zero inflows. Imagine you as a fund manager, your stocks are going to do so well. We are big into infrastructure, cap goods, defense, pipes, railways. They're sitting on there and nobody is listening to your story. It was damn frustrating at that point in time. But that's how it is. So next time, anyone out there, me or any of my fellow fund managers, you shout abuse at them, please understand that life is very difficult for a fund manager.
I'm sure. It must be...
Managing your own money.
You must be having a lot of sleepless nights, for sure.
Again, as I said, so to ensure that I sleep well, I became dispassionate about money.
You have to, if it's the kind of profession that you are in. Yes. But tell me about the psychology of money, right? The fear was highest in March 2020. Yes. But that was also the best time to buy. If you had gone all in, you wouldn't have to work a single day in your life, right? If you had put all your money to work in March 2020. But how do you deal with that fear? How do you overcome that fear?
So, as I said, I'd say first, never go all in. Doesn't matter. What if you'd gone all in February? Because the markets were attractive even in February. By March, you would have panicked and gone out. Because when you put in money, you probably put in 8-10 years of your hard-earned money. And when your portfolio goes down, you're staring at a very bleak future. So my suggestion is, I've invested, Sonia, every single year for the last 20 years into the stock markets. And it's rewarded me handsomely.
So how do you invest? Through
our fund. So I invest last 4-5 years since we started our AI 5 years back. I invest only directly into our funds. So I don't do direct equities anymore.
You don't believe in it?
Of course I believe in it, but it's through the fund. So there is no, there's no conflict of interest.
Okay, no, that way. No, I'm saying between active and passive, you think passive works better?
A disciplined approach works better. You have to be, as you said, a lot of these things, everybody has an asset allocation plan. And, but then you get into a bull market or a bear market and then you throw the asset allocation plan out of the window. So you need to have a very, very stable hand. Whenever you're making an investment, what you typically do is you think of the upside. Otherwise, you won't place. Like suppose you buy 1,000 shares of Reliance Industries. First and foremost, you're buying. You're buying because you're bullish. So what do you think? You say, okay, this is what, I expect it to go to say 3,000 rupees or something. But you have to train your mind to think, what if Reliance goes to 1,500? You have to think the other side of the trade. You have to train your mind to think what can go wrong when you buy, not what can go right.
So you said that you have a very disciplined approach to investing. For the last 20 years, you've been investing every year in your fund, right? Through the SIP route, I'm guessing.
Yes.
Any other investments, in the sense, any other asset classes that you're heavily invested in? What is your own asset allocation strategy?
So I'd say more than 95% of my net worth is tied to Aequitas. So I believe in having a basket of eggs and watching it closely. So I'm a firm believer in equities. I've always invested. Right now, we've started looking at international equities. We're going to launch a fund which is going to invest abroad because we find valuations more attractive. At some point in time, majority of my investments are in India, for sure. But uh, I'm an out and out equities guy, and I don't want anyone else to become like that because I understand it. I understand it, right? I've spent my 20, I can handle a 50% drawdown on my portfolio and not, lose my sleep. Not many people can do that.
At what point do you think you will have enough money to retire?
I had enough money to retire when I started Aequitas. So I don't work for money anymore, as I told you, sir. Sonia, as you know, it's after a point in time, you're never working for money. Do you think Mukesh Ambani and Gautam Adani work for money? Do you think Elon Musk works for money? You don't. You have to have a higher objective in life. You live once, you have to make the most of it.
And what is your higher objective?
My higher objective, continue to be a great fund manager, right? To build Equitas into an organization which everyone is proud of, right? As a team, we are super proud of what we do.
You
Our
should
clients,
be after
yes,
the performance that you've
our
seen.
clients are very proud of us. Our friends are very, people in our office go and, you know, whenever they say we work at Equitas, they talk with pride. We want to ensure that.
You have any mentors in the industry?
A lot of them, my mentors, but I never like meeting my mentors. I'd say Warren Buffett is my mentor, but would I go to Omaha to ever meet him? Never. Because I know Buffett would never do that. He would not spend so much money going there. He would rather invest in the markets. My best way to learn about Buffett is by reading him. Why would I want to go and meet Buffett? What would I get out of meeting Warren Buffett? Nothing. But if I read, I get to learn so much. So initially, when I started, Sonia, I learned about stock picking from Warren Buffett. When I started my career. When I started Equitas, I learned about building an organization from him. When I read his letters, reread his letters. Now when I read Buffett again, I realize how to live my life. Munger lived till nearly 100. Buffett is 93. They became rich because of the longevity, not because of taking more
Buffett
risk.
started investing very late in his life, relatively.
Yeah.
Any other mentors?
A lot of them. See, I have a list of role models. If I open my this, and I encourage everyone to write their list of role models. So I'll give you my list of role models. And it is from diverse fields. So it's Steven Spielberg, Christopher Nolan, Glenn McGrath, Ricky Ponting, Lionel Messi. I love him, right? Michael Phelps, Usain Bolt, Michael Jordan, Warren Buffett, Peter Lynch, Amitabh Bachchan for the longevity of his career, Muhammad Ali, Elon Musk, Jobs, Gates, Bezos.
Something to learn from everyone.
Alex Ferguson, Pep Guardiola, Deepak Parekh, Aditya Puri, N. Chandra, Jeffrey Archer, Michael Jackson, Taylor Swift.
I love it. Very diverse.
Yes, why not? So there's so much to learn from everyone around you, and you don't need to meet them. Look at Taylor Swift. She's a phenomenon, isn't she?
Whole industries are running because
I think
of her.
once she retires, she might probably end up becoming bigger than Elvis Presley and Beatles and Michael Jackson.
I'm sure. Yeah. She's already she's barely 30 years old.
Yes. Crazy, isn't she?
It is. But okay, so just before we wrap up, a couple of things. So, if we have so many young people who are entering the stock market, right? Retail investors, traders, they've never seen a bear market. What's your advice to them?
Go slow. Again, I said, nobody's going to listen to me. There's enough advice out there. You asked me to come on the show and I said, all that I'm going to say has already been said or written before. So, people, I read this book by Morgan Housel, and I would highly recommend everyone read this. Same as ever. And he said that we can learn from other people's experiences, but majority of the people don't do. If only we could learn from other people's experiences, we would be a lot more wiser. But unfortunately, nobody does that. People have to commit the mistakes. So my advice is go slow, but nobody's going to listen to me.
No, that's why you're here, to give us this advice, right? So you're saying go slow in the market, take it easy, because this is going to be a bit of a rough ride from here on.
I said, you've got a lifetime to do what you want to do. Why do you want to make all the money immediately? If you think the stock market attracts you, spread it out over 5 years, 7 years, 10 years. You can invest every single month.
And stay away from direct equities. If you don't have the time and energy.
Stay away from derivatives. I think that's a big socio-economic problem that we're facing in this country right now. Right? Unfortunate, but all the broking apps have become slot machines. People have to open their apps at 9:15 and put a trade. Correct. I just put out a tweet, derivative volumes in India with respect to everywhere else. I think it's become a disease. It's become a disease. Derivatives in India has become a disease, and we need to curtail that. Otherwise, there will be serious consequences.
Why would you say that?
A lot of people are going to lose a lot of money. It's like gambling. It's like lottery. You have daily expiries. You have weekly expiries. Are you kidding me? You tell that derivatives are hedging instruments. How do you hedge in a day? How do you hedge? These are pure gambling instruments. These are pure gambling instruments. So this has to end.
So what do you think the regulator should do?
I think, I don't know. I have no, that's for
for them to decide.
The regulators are the doctors. It's for them to, I see a patient with problems. And this is something that could derail the Indian economy as well. This could derail the Indian economy as well. So
derivatives and the mass volumes that we're seeing over there. Okay. In terms of sectors, just quickly before we wind up, there's so many sectors which have done really well, right? Whether it's PSUs, defense, railways, huge gains. You think the best is over?
Very difficult to answer that. Very difficult to answer that. I could have told you back in 2020 that, look, some of these companies were available at below cash. Some of these companies were available at 0.1 times market cap to sales. But right now, they're priced to perfection. None of these stocks factor in any room for bad news. And if at all there is bad news, you could see heavy cracks in this. I said, very happy with our economy, the way we are doing, our culture, right? Our focus on education as a country. But at the same time, I'd be wary. Let me put it this way. Just be a little wary.
Everything comes at a price.
Yes.
Well, on that note, thank you so much, Siddharth, for joining us. Really a pleasure speaking to you.
It was a pleasure being on the show.
I enjoyed the conversation. So much to learn, and hopefully we'll speak a lot more on the channel as well.
Surely. Yeah. Thank you. Thanks, Sonia. It was a pleasure being on the show.
Thank you for watching CNBC TV 18. For all the latest news and updates, do follow us on our social media platforms.